Hi dear traders! Last trading week, markets were gripped by anxiety as investors worried about the possibility of a default in the United States. The sentiment this week will most likely stay the same, as the US government has not yet come to an agreement of the debt ceiling. Let's discuss how this event has influenced major trading instruments. The inflation data in the US that was published last week showed a slowdown in consumer prices. At the same time, there are signs of a cooling labor market and a deterioration in consumer sentiment. This inspires confidence that in such conditions the Fed may want to avoid another rate hike. If so, the US dollar should come under pressure. Yet, the greenback gained around 1.4% last week thanks to its status as a safe haven asset. The threat of a default in the United States and the ongoing banking crisis have dampened the market sentiment. The euro fell against the dollar to 1.09, its lowest level in 3 weeks. Another factor to add to the risk of sentiment, and the euro is a risk asset, is the macroeconomic data coming from China, where inflation has significantly eased to near zero. These can pose a threat to the global economy recovery. Traders no longer want to keep their buy positions on the euro, even though the European Central Bank is determined to raise the rate further. Meanwhile, the UK regulator is likely to maintain its hawkish stance in order to fight inflation. Last week, the Bank of England raised the rate by 25 basis points and revised its economic outlook. Surprisingly, despite being so conservative, the Bank of England has abandoned its forecast for a deep and long recession and described the British economy as stable and resilient. However, the pound-dollar pair showed no reaction to this statement. Risk aversion is still strong in the forex market, with the US dollar being the main winner. Likewise, the Japanese yen closed last week with losses, even though it's considered a stronger safe haven asset compared to the greenback. Most likely, the decline in the yen came amid the carry trade strategy, which implies that the currency with a higher interest rate is in more demand than the one with a lower borrowing cost. For your reference, the Bank of Japan keeps its rate in negative territory and is not going to change its monetary policy anytime soon. Gold also depreciated in the course of the weekly session. The yellow metal eased mainly due to the overall strengthening of the US dollar. A stronger US dollar makes gold more expensive for foreign buyers, which is why its purchases declined. Still, gold is trading steadily above $2,000 per troy ounce. In the meantime, oil is following the prevailing trend and is being capped by a strong US dollar. The energy market was under pressure from mounting concerns over a drop in crude demand amid a slow economic recovery in China and the recession threat in the US. As a result, Brent ended the week near the level of $74 per barrel. These were the trends of the last trading week. And now a new week and new portion of macro data are ahead. Do not miss our daily news reports to be always in touch with the latest events. See you!